the ship's gonna sink, but it's not sinking yet. It's still moving forward. We are expecting a run, like another run up. Our my risk model, which is looking at drops in liquidity. Generally, as you run into the tail end, maybe 3, even 6 months before the top, you see that risk climbing. It's like early warning signal we're late phase. We are in late phase. So in the 2021, it sort of kicked in, I believe, once we hit $40,000 and it ran up to 60. And then it screamed risk on until it dropped, and then it went up again to 70, and then it blew out.
The structural dynamics of the cryptocurrency market are undergoing a profound evolution. While many market participants still cling to the rigid framework of the 4-year cycle, the data suggests a significant dampening of volatility. We are likely transitioning away from the exaggerated 85% drawdowns of the past toward a market structure that more closely resembles the S&P 500, a continuous upward trajectory punctuated by manageable corrections of roughly 30%. This shift is largely driven by the maturation of the asset class. The toxicity and leverage that plagued previous cycles have been partially flushed out, replaced by a buffer of sovereign and institutional demand. However, this does not imply a risk-free environment. We are currently navigating a mini-cycle where global liquidity acts as the primary tide. Understanding this new, muted volatility profile is essential for navigating the next bear market, which may arrive sooner than historical models predict.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
I think we're still on a 4-year cycle, but they're less exaggerated because global liquidity is kind of 4 years-ish. So now the halvening is kind of out, but global macro is 4 years, a little bit less precise.
Mm-hmm.
And so I expect another bear market. I don't think it's going to be bad as like 85% drawdown of last one, just because there wasn't so much crap and toxicity in the system. Um, but there's still a lot of crap in the system. We talked about Bitcoin treasury companies. There's weakness there. I don't think it's like, if MicroStrategy blew up, sure, that could pretty that'd be pretty bad. I don't think that's going to blow up, but some of the smaller ones might. And so, and then also we've got so much institutional demand coming in and sovereign demand, so I think that'll buffer it. And so maybe Bitcoiners will shrug it off, say that's not a cycle, haha, that's it's a mini cycle, and and so it becomes more of a sort of random walk. Or like if you look at the S&P 500 and you zoom out from it, it's actually just a straight line up with chops. And the big bear markets, it might be 30%, but it looks huge, but actually it's not that bad. So maybe it becomes more of that. I kind of feel like it's debatable. With this next bear market, we'll get a pullback and it'll look like a 4-year thing. The one after that might be a little bit better, like harder to find like a traditional, blood on the streets bear market. It's kind of the canary in the coal mine on where we are in the cycle, that it is actually Ethereum, because certainly in Bitcoin, okay, Bitcoin has not done its bull run yet. If you look at historical patterns, you kind of wind up and you really go for it, and the capital in is not really going for it. And maybe we don't get it because this is like institutions and they don't FOMO in, right? But when we look at Ethereum, that's looking strong, and usually that is a sign of strength in the market. No one buys Ethereum if no one believes there's strength in the market. So we are picking up strength there. That's picking up. That's therefore meaning there's probably flows out of Bitcoin into Ethereum, and Ethereum that makes another leg up. That's more of a signature of we're really into a proper bull phase. If that's supported by Bitcoin going up and capital is really flowing in, um, we are. We've entered the late phase of a bull market. Early phases, we have very strong liquidity. Um, that liquidity is starting to dry up, but that's also when you see crazy moves upwards. So We are expecting a run, like another run up. Our my risk model, which is looking at drops in liquidity. Generally, as you run into the tail end, maybe 3, even 6 months before the top, you see that risk climbing. It's like early warning signal. We're late phase. We are in late phase. Um, this is in 2017. That's kind of like Bitcoin at 5,000 before it ran to 20,000. It's also last cycle in the 2021. It sort of kicked in, I believe, once we hit $40,000 and it ran up to 60. And then it screamed risk on until it dropped, and then it went up again to 70, and then it blew out. And it was high risk all the way down to 16,000 before it dropped up to low risk again. So, it's like it's kind of the most lucrative time, and it's also playing chicken with freight train. Yeah, if you want to time the top. But I would say internally within Swiss block, within the macro signals, as Henrik would say, he's the global macro economist inside Swiss block, is that recession signal is fired. The Titanic's gonna hit the iceberg. In fact, it has hit the iceberg. It's a big ship. It's a super tanker. Nothing moves quickly. The ship's gonna sink, but it's not sinking yet. It's still moving forward, and the timing signature hasn't fired yet. So certainly, global macro sees strength in equities, strength in the market still. Probably another up leg. Bitcoin will probably fire. Altcoins will fire. Ethereum will fire. We'll get that rotation, and then we're in for a bear market afterwards. So it's imminent. Timing wise, well, we've got to wait for the timing signals to fire.
To accurately time the market, we must look beyond Bitcoin and analyze the flow of liquidity across the entire digital asset ecosystem. Currently, Ethereum acts as the critical canary in the coal mine. When we observe strength in Ethereum and a rotation of capital out of Bitcoin and into high-cap altcoins, it signals a genuine risk-on environment and the acceleration of a broad bull phase. However, this internal market strength is juxtaposed against a precarious global macro backdrop. Institutional risk models indicate that the recessionary signal has already fired. To use a stark metaphor, the Titanic has hit the iceberg. But because the global economy is a massive supertanker, momentum carries it forward before the sinking begins. Consequently, we anticipate one final explosive leg up. Liquidity is currently abundant, but as we enter this late-stage euphoria, similar to the run-up seen in 2017 and 2021, risk metrics will begin to climb vertically.
We're putting together like long-term studies of liquidity flows across all of these markets, from global macro through to the Bitcoin, which is the base of the framework which drives all the altcoin markets. And we're looking at liquidity flows from Bitcoin into alts. When is alt season happening? We can tell that from the microstructure to the macro structure of these markets. So we're measuring volatility, and we're picking up on definitions. We have multiple definitions of what liquidity is. And from that, we bring it all together. So it's like I can, for example, my work, I can absolutely tell you what liquidity is in the Bitcoin lens. I see liquidity as like capital flowing into the network, and also picking up of the structure of the price action. How is that, like liquidity is the downside muted because the flow of capital, and is the price action muting downside volatility? That means that's capital coming in. And so there's these various frameworks and various structures you can look at on chain, and just sheer microstructure of the pricing. And you can do that across Bitcoin. You can do this across top 200 altcoins. You can look at it as a cohort. You can go, wow, right now Ethereum is actually quite liquid. That means buy side, and it's stronger than Bitcoin. Therefore, we theorize from this that there's liquidity flows out of Bitcoin into Ethereum. And then up, big caps are going, up, mid caps going, low caps are going. And actually, in a full-on bull market, you see Bitcoin launch, Ethereum, big, mid, low cap, because everyone's chasing higher risk as the whole cascade goes. And there's other times where it's oscillating between Bitcoin and Ethereum and might go mid cap and then fire off down and it's just random noise, right? But you can pick that up and you can know what's happening between the flows going between all of these things. Is global macro pushing into Bitcoin? Is Bitcoin pushing out to altcoins and so forth? And then, the altcoin vector is looking very much into what's happening within the altcoin space and going, what's like, these are the coins that it seem to be what's really going forward right now. It even picks up some of the picks and expectations and so forth. So altcoins connects to Bitcoin. If you look at the whole lot, you get a broader view, but the centerpiece is the Bitcoin part because that's driving the market.
In conclusion, we are entering the most lucrative yet dangerous phase of the cycle. This is the period where liquidity creates a cascade effect, flowing from Bitcoin to Ethereum and finally down to mid and low cap assets. While the upside potential is significant, this late phase is effectively playing chicken with a freight train. The smart money is watching for the liquidity drought that inevitably follows such rapid expansion. Ultimately, Bitcoin is shedding its erratic behavior to become a predictable cyclical asset, but the transition period remains volatile. Investors should remain aggressive but vigilant, recognizing that while the immediate horizon promises growth, the macroeconomic reality suggests the ship is taking on water. Position yourself for the rotation, but be prepared to exit before the momentum shifts. This is no longer just a random walk. It is a calculated liquidity game,